everybody, welcome back to Royal Blu FX, and in this video we're going to talk about what caused the break of structure and where the markets will mitigate. Now I know for some of y'all, you're probably wondering what is this whole thing in the background. Well, it's just my wife's business where she works. And as always, I promised from last week's videos that I picked up 3 winners, and they're right here. So definitely reach out to me personally at RoyalBlu.FX on Instagram to begin your free consultation. So every week I hold 3 consultations for 3 winners. All you have to do, subscribe, comment down, and then tell me what you're struggling in Forex as a trader. So let's begin.
Nothing can stop me. I'm all the way up. All the way up.
All right, so a lot of us know how to identify breaks of structures in the market, although this video is not going to talk about breaks of structures in the market. We're simply going to talk about the cause of the break of structure. And then following after the cause of the break of structure, we're going to want to know where the markets will mitigate. So once we find that cause, then we can have a high probability to see and find where that mitigation will happen in the market. All right, so without any further ado, let's begin. As you see over here, we have a bullish example that's pushing upwards, right? You can see when prices breaking above, retracing, breaking above, we need to find out now where that cause of that market, of that break of structure is. All right, so the cause is generally where prices retracing before the extension happens. We need to see what caused that break of structure. Like right here, for example, when you see that there's a break of structure happen, below will be an area where price reversed, or where you see the last down candle or the last down move before price extends and breaks that high. All right, so in theory, this area down here would be the cause of the break of structure. Now, no, I'm not making perfect sense just yet, but bear with me and you'll see how it will all make sense throughout this video. So once there's a break of structure, right, you see price retraced all the way back to an area of demand, where this area here, this extension, broke that break of structure, right? That's where we buy. So this is where you would buy, right? So once price extends again, you can clearly see we have a change of character happen in this area right over here. There's a change of character that happens, right? Once that extension happens, price retraces back because somewhere in here is the last down move that was created, last down candle before price broke above structure. Okay, so price mitigates, then comes back to an area of demand in that area where price is mitigating that last down move before the price broke right over here, right? So let's take a look at this on a broader spectrum here. Okay, you can see here we have a high and we have this low. Price breaks out of that high. Now we know that there's a break of structure that happened. All right, now let's retrace backwards and see where why that move broke structure. Who caused it, right? Was it this low here that caused this break of structure, or was it this low, right? There's 2 scenarios, but one of them is the true one, right? Obviously, it would be this low here because this is where price extended very fast, right? If we understand our highs and lows and our structure in the markets, you can understand what actually caused that break of structure to happen. And it was this higher low right over here that happened, right? Only because this is where price pushed very aggressively, and that's what caused the break of structure. You can see this scenario play out in every example. Okay, in every part of the charts. You can see when price retraced, price extended. Now we need to see what actually caused this break of structure. Was it this retracement, or was it this retracement? You can clearly see that price broke once. You can see price broke out over here once price retraced a bit and price broke right above. Okay, so when you're looking at scenarios, when you're looking at a chart, we're going to go into a live chart right after this, but when you're looking at the market very specifically, always find your highs and lows and find which extension, what caused that break of structure. Once that break of structure happened, we have that thought to ourselves, okay, well, it could be this area here, or maybe it could be this area here, right? Only because we see an area where price reversed a little bit and then extended, and then price reversed and extended. Now, I'll tell you why this is the actual break of structure, why this is the actual cause instead of this scenario down here. The reason why this is the area that caused the break of structure is because this there's something. This extension actually did something. Okay, when we're looking to trade, when we look and wait and we're patient, waiting for those breaks of structure to happen, we need to see which area actually broke that structure. What caused that break of structure? Okay. So you can see here, this move here, this extension, did something. It actually broke that structure here, the structure high. Although this move here didn't actually cause the main high to be broken, as you see, right? So this low here never did anything. It didn't break anything, any high over here. It only broke this substructure high here. And eventually we wait for prices to come back here to mitigate if prices haven't already, right? And then we look for that extension. But unfortunately, in this scenario, we see that price this low here didn't break this high, right? It was this this higher low here that broke the main high here, and this is what caused that break of structure. Therefore, we have a high probability now to wait for price to retrace and know that this is where price will most likely mitigate for price to extend. Okay, very simple, very easy, because this is how prices work. This is how the markets work. All right, let's look at this example down here. Okay, you see there's a low and then there's a high here. What caused this break of structure to occur? As you can see, the full extension happened here. This retracement is the one that actually was responsible for this break of structure. Okay, so now when you look at the two, there's two scenarios here. There's a low here and a high here, a low here and a high here. All right, who was responsible for that, for this main break of structure? All right, was it this move here, or was it this main move? Right, you can clearly see that this is what caused the break of structure. This low and this high here, okay, where this change of character happens here, this didn't make the market do anything. Okay, it didn't actually break this high. And what we're looking for when break of structures happens is we're looking for an area that caused a break of structure. Okay, I know I'm going to repeat this many times in the video, but I really want you guys to see this, how this actually works. It's the cause that is the effect of that break of structure. Okay, if there's a break of structure, if the markets are doing this, right? Let's say this scenario, like it's doing this, right? Notice how price isn't doing anything here. It's not going up or it's not going down, right? I mean, maybe you're looking at, maybe we're going on an uptrend like this, right? And therefore we see that there's a low, that there's a high. But when prices are pushing back like this, notice how price isn't really doing much, right? It's not causing to do anything in the markets until price actually starts showing us the price is interested to go to the upside. Now we see where that cause was. Now we see where that cause that caused the break of structure. Sorry, where that break of structure was caused, right? And it was right here. This is where that low, right here, the range starts from here, and then wherever the markets will go, you know, wherever the markets reverse from, like this, right? This will be our low, this will be our high. Now, this is the range that we're working with in terms of looking for potential buys, right? Something like this. So we know this is what caused that main high to break, not this low or this low, because none of these lows did anything to occur or cause this break of structure to happen. Although, in terms of our lows and highs, this would be considered our low, this would be considered our high in the markets, right? So technically, if price did fail to, you know, say continue from here, if price did this, and price did something like this, and it failed to extend, and price went low like this, we still have that low to work with. We still understand that price is still able to continue to the upside because it failed to break this. It failed to go higher than this high, right? And it failed to go up, right? You can see that failed reaction happened right there. Price tried to push up, then price retraced all the way back down. Now we still have a chance and a shot for price to reverse to the upside. Let me move myself from here, right there. Okay. So once prices retrace like this, right? Who knows what will happen here? Price can do whatever it wants to do. All we're doing is we're waiting for the cause to happen, right? We're waiting for that cause first. Okay, and we're waiting to see if price can respect that low. If price can respect that low and give us a sign like this, for example, like this change of character, you can see that price is giving us an early sign for potential early entry, right? Okay, so as you see, price is mitigating, right? Now that we understand that prices come down to this low here, price is starting to change, structure from substructure to minor structure, then price can start doing this, push up like this. And now we have to see, well, what broke that? What caused this break of structure, right? Well, it was this low here. This is where price extended. This is where price broke structure. Now we'll wait patiently again for price to come back and extend, mitigate, and then extend again. And that's what you need to do as a trader. You just need to wait patiently for these causes to happen in the market. Okay, we need to understand our highs and lows. We need to wait for that break of structure, and we need to see what caused that break of structure. As simple as that. Very simple. Okay. Let me show you down now on the bearish example and show you how the bearish side works. Very similarly, obviously, to the uptrend. Let's go over here. All right, right here. All right, so clearly, let's go down here. Clearly, you can see the price is going bearish, okay? If you look over here, this is very interesting. When price extended, right, price retraced and then extended bearishly really fast, right? In a lot of cases, you all probably have seen a scenario where this happens, right? Where price is going a little bit down and then kind of stalling for a bit. It's pausing actually, then extending all of a sudden. You're like, well, where's my true retracement? Where's that pullback? This pullback didn't really do anything. It didn't really mitigate anything, right? Well, lo and behold, if you understand how price extends, okay, we're looking at prices where prices have broken structure and where prices have extended really fast, like in this scenario, right? So this would be an area of an interest for the markets to come back to, okay? When prices retrace like this, now this is the area that causes huge break of structure, right? Structure is structure at the end of the day, right? All we're looking for is that huge extension that happens to the downside or to the upside. In this case, you can see the extension happened to the downside quite fast, quite rapidly. So we have a sense and a theory, obviously, an understanding. Psychologically, we understand that price should just move back to this area where price has moved so fast, right? And then we would look for that change of character when price mitigates here. And then we look for that change of character like this and wait for that entry to happen. Now, what caused this break of structure, right? It was this little retracement in this area, right? Because price pushed and extended so fast. Okay, let's look for this example now. When price extends, where was that cause? Who caused this break of structure? Where it was this retracement, this little pullback here in the after prices have switched hands over here. Obviously, prices have done a change of character. This is the only area that price has broken this major low here, and it broke very rapidly. Therefore, this is the most probable area where price will come back and mitigate to. Okay, because as you see, there's nothing in the way of price in here where price stalled for a little bit and then pushed price down. If that happened, right, then this is our most probable chance where price will come to mitigate this area, and then we look for the change of character here and wait for the change of character and then wait to take the sell from this side, right? But that's not what clearly happened, as you see. Okay, price just extended fast, and we understand that. If we understand our highs and lows, right, you can see that a minor structure was going up like this, right? And all of a sudden you can see the change of character happen. So now we understand that this is our high, this is our low. Okay, this is our high, this is our low. We're working within this range only because this area or this extension was responsible for this break of structure, and this is what caused that break of structure happened. All right, once price mitigates, again, we can look for another change of character happen, right? Once price extends like this, okay, you can see multiple extensions happen in the market. You can clearly see there's an extension that happened here, there's an extension happen here, okay? But let's question ourselves. What caused that break of structure? Was this retracement the cause of the break? No. Was this the cause? Yes, because it's very simple, very easy to understand. We're looking for areas clearly where price has extended first and that have done something to the nearest low or to the nearest high, okay? And this is our nearest low, lower low. So we're looking for when price retraced and then extended, rapidly breaking structure below. You can again see that this is the area that caused the break of structure. And then price comes back to it and then mitigates. And then now we can expect the mitigation to most likely happen in this area, only because we saw that this area here was responsible for that break of structure that you see to the left side here. Okay, very simple, very easy. Okay, the whole key point to this really is just understanding the to make it all simplified for yourself. Make it very simple. When you follow these rules, you'll understand and see how the market's behavior is at all times. Okay, so let's go to a live example, and we're going to break it down for you a little bit more so you can see how the markets work. All right, so let's go over here. Let's go, we're on the 4 hour right now. Let's go over here and we're going to talk about this extension here. Okay, we understand our 4 hours are major time frame, so we're going to use the 4 hour as our directional time frame, nothing more, nothing less. And then once we identify where price has shown us the direction in terms of a break of structure, say for example here, okay, right there, you can clearly see that we had a break structure there. Once that break of structure has happened, now we have to see what caused that break of structure to occur, right? You can clearly see this is the break of structure. This is the area that caused that break of structure. And why is that the area that caused the break of structure? Well, look what's happening clearly. There's a huge extension that has happened right down here. All of this was just a little bit of noise, right? It was consolidation, it was ranging all the time, and then all of a sudden price rapidly moved to the downside, all right? And we know that this movement here isn't the cause of us, retail traders, or smart money concept traders. It's really the cause of the banks. Banks and institutions do this, right? So once there's a rapid movement, just notice again where price mitigated. That's where price is going to mitigate based off of this area of extension. Okay, look above here. Some traders might say, well, okay, well, the mitigation actually started from this last down move right here, right? Well, technically that's not true, because let's look at over here. Let's examine. Let's zoom in here. Did this area have any? Did it cause anything? Right? If you look over here, here's our low, here's our high, right? We saw that this move wasn't that rapid. It didn't move fast. It didn't actually break this low here. So how on earth could this be the order block, right, to this move? It's not probable, right? It's not realistic. You need to wait for prices to do something here, and that something is a break of structure. Okay, let's continue from here. So I don't continue mumbling and rumbling or tumbling, whatever you want to call it. I'm confusing my words here. Okay, so once there's a break of structure, we see there's another break of structure. Let's go here. All right. So notice what's happening here. This could be very busy and very noisy for some traders. Okay, as you see, when price was at here at this high at this time, price broke structure. Let's see what causes break of structure. We have 3 scenarios, right? You can see here. We have 1, okay? We have 2, we have 3, okay? Which one of these 3 caused the break of structure? It wasn't this one, because this high didn't do anything to this low, okay? This high didn't do anything to this low. This high did something to this low, right here. It actually broke the structure. So we know that this lower high here, this lower high right here, was the one responsible for that break of structure. Okay, that's how you can find out now where the next mitigation will be. Okay, and as you clearly see, again, we mark that high right there, and there's where your where your entry would be, right? So again, let's look at it again. We have another break of structure right there, and then price then retraces all the way back. Notice what's happening here. Now this is very interesting, a very interesting scenario. Okay, we have a high and we have a low. Okay, if you notice in here, and a lot of you that will probably be joining us to our Royal Blu FX course will understand what this is in particular, but I'm not going to explain it in this video. It'll be unfair for those people that are those traders in our course. But when price is reversing here, you can clearly see that there's a stall, there's a pause in this area, right? And this is where the markets will most likely come back to and mitigate based off of this area that broke structure. Okay, you can see how there's a high, there's a low, and then here where price is mitigating, it's mitigating to an area where price has actually done something. It has broken, it has caused that break of structure to occur. Therefore, we have a high probable chance the price is going to come here, and then we look for the area to enter and or go on the lower time frames to look for entries at this area of supply. Okay, another example here. Let's go another bearish example here. Let's go to this example here. We'll go to the bullish example as well. You can see there's a break of structure here. Let's zoom in here. You can see that this high didn't do anything to this low, right? You can see this high did something to this low right here. So in all theories here, you can see that this was the high here. You can even do this high and low. You can extend it like this. You can see that this is where price, where we can look for sells, right? Price is going to have a high probability chance to mitigate here for that extension to happen. All right, guys, very easy, very simple to understand. All you need to understand is your break of structures and understand where your higher highs are and lower lows are in the markets. Okay, let's work on something pretty big here. Okay, not even. I don't know what I'm saying, but not something big. Let's look at the uptrend here. Okay, so as you can see, we're on the 4-hour again, right? If we're looking to follow order flow, price is pushing to the upside. You can see here, there's a break of structure right at this high. Okay, and then right there, you can see price is pushing, retracing. Let's look at the area where price has caused the break of structure. Okay, you can see here. There is a rapid move to the upside here. This is where the area of the break structure is. Why? Well, look what's happening here. This high, this wick here, isn't considered our true break of structure in Royal Blu FX. It's just a wick break. It's a rejection, right? But then price rapidly moved up to the upside again. It caused a little pause in the market, and then price rapidly moved to the upside. So in essence, this is where price is going to mitigate, because this break of structure is what caused this break of structure to occur, right? So that's where we would look for potential entries in the market right here, because this is where we expect for markets to mitigate to. All right, let's look at another example. We had another break of structure here, and then we could look for the area that caused the break of structure. Notice again here, there was a low, there was a high. To some of you, this may be a little confusing. Obviously, you can see this is a supply and demand. This is a demand zone here. It's a pivot point demand zone. A lot of you guys will understand this if you join the course. But this is where the entry would be based. Sorry, not the entry. This is where the markets will most likely come back to, because this is what caused the break of structure. If you see this huge area, this huge impulsive candle to the upside, it caused that break of structure, right? So we know that this is the area that's most likely going to come back to mitigate, to extend. All right. Keep it very easy, very simple for each other out here, right? For yourself, not for each other. There's another break of structure that happened here to the upside. We're looking what caused the break of structure. You can see that this candle here broke this high here. If you zoom in here, we can see that here's the low, right? And here's that high. Somewhere in this area is where price is going to mitigate. We see that there's a empty wick here. Again, if you watch our course, you'll see and understand that, what these wicks mean in our course. what the market is doing here is very, very tricky. In fact, what it's doing is just taking liquidity from the low, and then prices starting to extend. But in none the case, we can see inside on the lower time frame, we can see prices exchanging, doing a change of character here, and then taking advantage to the upside in the market here. All right, so let's look at again. What was the cause of the break of structure at this one? Last example here, you can see that this high, there's low and there's a high here. Now we got to see what causes break of structure to happen, right? Look over here. There was an area, this low didn't do anything to this high. There was an area where price extended, retraced, and then extended again rapidly. You can see that there's an area here where price is going to respect for the markets to go and extend to the upside, right? Now, if you look at this a little more broadly, you can see what's happening here also. Now, on a major time frame, on a major structure, you can see that this is a low, this is a high here. Clearly, this is a clean extension to the upside. This extension here is what caused the break of structure. Therefore, this would be the order block here, right? If we so we know that in a major time frame structure, that price is still willing to go to the upside here because it did break a major structure. You can see here, we'll show you how to obviously refine your order blocks, and understand where price is going to most likely mitigate based off of this huge extension here. So in any case, obviously you could do this. You could mark your low and mark your high from this major order block. But the bad part of this is that you're going to have a huge, risk to reward here, which is very unhealthy. It'll cause you to obviously hit or miss your trade here, most likely either break even or lose your trade here. But in our course, like I said, we teach obviously how to refine your order blocks and how to exactly find where the actual entry is on a lower time frame. But essentially, this is how it all works. Okay, all you need to again is just wait for prices to extend fast down the markets. Retrace your steps back and notice what caused the break of structure to happen in the market, and therefore you will see in terms of how prices react, right? So guys, I will leave you with this video. If this video was very helpful, please, I beg of you to leave a comment and or like and subscribe to this channel, because we are trying to always leave some quality value to this channel, and I really appreciate all of you guys, and thank you so much for understanding us, because we're really working really hard here. I'm in Russia right now, obviously, but I'm going to be going back to the States in 2 days from here. So I really apologize that our course hasn't been released yet due to a lot of this, these complications with Russia and Ukraine. But thank you so much for supporting this channel, and thank you for supporting us. We're all a family at the end of the day. So without any further ado, I will be exiting from here. The king is out.
Nothing can stop me, I'm all the way up.